Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Welcome to the ISE FX Options Outlook for the week of November 23rd to the 29th. As always, I'm your host, Jason Ayres, founder and president of OptionSource.net. We're going to start with a look at our weekly U.S. dollar index. This is a great way to gain some perspective as to how the U.S. dollar has been trading against a basket of currencies. Well, the U.S. dollar closed strongly this week as it finally broke through that 86 to 88 focal zone that has been an area of interest for quite some time. After the break of a bull flag on the daily chart, several tests of that key 86 to 88 resistance area, with the daily lows getting higher, has appeared to have resulted in what looks like an ascending continuation triangle. Should the index hold at this level, once again that 90 to 92 focal area remains our upside target. Although the path of least resistance seems to be to the upside, a natural retracement in this extended upside move would likely take us back down into that 80 to 82 box. All right, now let's take a look at our first ISE FX options pair value. When we last looked at the CDD, the US versus the Canadian dollar, the pair value was consolidating within our 123 to 125 focal zone. We suggested that a break above that would likely give way to another test of that 130 to 132 level. And after a strong rally, the US dollar has clearly met with an anticipated resistance. With such a strong rejection, the window is now open for a test back into that 123 to 125 area. We have a lower support identified down at the 119 to 121 should that area not hold. Now, although we are cautious of the potential forming of a topping pattern, further strengthening of the US dollar against the Canadian will have us targeting the CDD pair value up into the 135 to 138 box. Okay, next in line is the YUK, the US versus the Japanese yen. We had recognized what appeared to be some indecision in at the 96 to 97 focal zone, and we'd suggested that a break lower would likely find support at the 93.5 to 94 area. Now, at this point, you can see that we had a strong bounce, which puts us back into the 96-97 range. Watch for some consolidation in this area with a push to the upside, trading into that 98 to 100 focal zone that we've been watching for quite some time. If the US dollar is unable to break and hold above this 96 to 97 area, then we'll likely see a retreat back down into this 93.5 to 94 box. All right, moving on to the EUI, the US versus the Euro, we can see the formation of an ascending triangle. As referenced in our outlook for the US dollar index, these patterns have a tendency to precede the continuation of a prior trend, in this case to the upside. With that in mind, the 80 to 82 focal zone still continues to be an important resistance level. Any rejection here is likely to pull back into that 77 to 78 focal zone here with an intermediate term support down within our 75 to 76 area. A break above the 80 will start the next leg higher with our first target within that 84 to 85 box. Well, after almost a two-week parabolic move to the upside, the BPX, the US versus the British pound, seems to be meeting with some resistance at the 68 to 69 focal zone. At this point, it would be natural for the pair value to seek some support, the first level to be tested likely back into the 65 to 66 area. Any further weakening would likely see the BPX pair value retreat back into that 61 to 62 box. An important observation is the pair value's proximity to a multi-year high for the U.S. against the pound, which with such a key resistance level so close, a further push to the upside into that 71 to 72 box must be considered. And finally, let's take a look at the AUX. Last week, it appeared as though the US dollar was seeking some support at the 150 to 152 level. And while we had been watching for the potential confirmation of a head and shoulders topping pattern, we suggested that if the pair value could hold here, a retest of the 160 to 165 focal zone was a high probability. With this test now completed, the pair value appears to be rejecting here, suggesting a possible retest of the 150 to 152 focal zone. A consolidation within the 160 to 165 focal zone and a definitive break above the 165 opens the window for the next leg higher into that 170 to 175 box. Let's just review a few of our key points. First of all, our thesis continues to be bullish for the U.S. dollar over the longer time frame. However, we are cautious of topping patterns forming within our CDD, the EUI, and the AUX ISE FX options pair values. The BPX continues to trade higher, and although we are seeing some consolidation and the possibility of a resistance level forming, currently we are just shy of a 6-year high, so we have to be open for the possibility of one further push up into that next focal zone. And finally, although the YUK has been marching to the beat of its own drum as of late, we are starting to see signs of a possible reversal, so look for some support coming in at the current YUK levels with the possibility of a strengthening of the US dollar against the Japanese yen. So folks, this has been your ISE FX options outlook for the week of November 23rd to the 29th. I am your host, Jason Ayres, founder and president of OptionsSource.net. Thank you so much for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX options trade alerts, just visit www.optionsource.net. To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.